Stock of the day is Goldman Sachs. We're going to look at whether or not you should invest in Goldman Sachs stock. Now, in the world of banking and finance, there are few institutions that are more powerful than the mighty Goldman Sachs. A Wall Street titan, it has been dominating the capital markets for decades. So in this analysis, we're going to look at the investment case for Goldman Sachs shares. We'll examine the pros and cons of owning the stock and also look at some broker share price targets. Now, one of the biggest attractions of Goldman Sachs from an investment perspective is its diversified business model. Today, Goldman's operates in three main areas. Global banking and markets, this encompasses investment banking, mergers and acquisitions, IPOs, trading. It trades a range of financial instruments for its own account and on behalf of clients, and security services, clearing and settling trades, custodian services, etc. Asset and wealth management. Here it manages investment portfolios for individuals, institutions and sovereign wealth funds. And finally, platform solutions. This includes consumer platforms such as credit cards and point of sale financing and the transaction banking business. Additionally, the company has a research division. Here it provides fundamental insights and analysis for clients in equity, fixed income, currency and commodity markets. This business diversification is a major plus. That's because it provides opportunities for growth in different economic environments. Going forward, asset and wealth management, which generated revenues of $14 billion in 2023, could be a key driver of growth for the company. As markets and assets under management rise over time, earnings from this segment should rise as well. Looking beyond the business model, the company's strong brand and industry dominance are worth highlighting. Founded in 1869, this is a company with a long track record of success and a reputation for excellence. It aspires to be the world's most exceptional financial institution. It's worth noting that in 2023, the firm ranked number one in a worldwide announced and completed mergers and acquisitions, equity and equity-related offerings, and common stock offerings. But now, while Goldman Sachs has plenty of appeal from an investment perspective, it also has its risks. One of the main risks to be aware of here is economic and financial market volatility. Banking and capital markets activity are cylindrical in nature. This means that a recession or a market downturn can lead to a decline in the company's profits and stock price. Competition is another major risk. The banking industry is highly competitive, and Goldman Sachs is up against some big players, including the likes of JP Morgan and Morgan Stanley. And this competition could limit its market share and profitability going forward. Finally, there's regulatory uncertainty. Goldman Sachs operates in a heavily regulated industry, and changes to regulation could impact its business model significantly. As for whether or not it's a good time to buy Goldman Sachs stock, it really depends on your view on the global economy and financial markets. If you're bullish on the economy and financial markets, it could be a good time to buy Goldman's. However, if you believe that a recession and a downturn in the markets is likely, it may not be a good time to buy. Looking at the stock's valuation, it's quite reasonable today. Currently, the price to earnings ratio is about 11, which is not too high. A dividend yield of around 3% adds weight to the investment case. In terms of share price targets, it's hard to know what price Goldman Sachs will look at in the future. That's because in this sector, stock prices are quite volatile. However, it's worth pointing out that at present there are 22 analysts covering the stock, and they have a median price target of $418, with a high estimate of $493 and a low estimate of $325. And that median share price target represents an increase of about 8% from today's share price. Now, I mean, it's not huge, but it's certainly worth looking at. If you want to see our most recent Goldman Sachs ratings and analysis, go to the Good Money Guide, search Goldman Sachs.